So supply and demand zones are one of my favorites because it makes support and resistance more simple in my opinion. Because when you're doing support and resistance, you usually draw those really thin lines. You have a bunch of them on your chart and you don't really know which one is more important than the other. So supply and demand zone, it's very clear which one's important, which one's not, and which ones you should have on your chart. So a supply zone is a zone of resistance where lots of people are selling. So a supply zone is where people are putting a lot of sell orders, where there's a lot of bearish volume being put into the market. And you might know the saying, when price is high, there's high supply. When price is low, there's high demand. So that's essentially what's going on here. When a lot of people are selling out of a certain commodity, crypto, whatever you're investing in, that's going to cause a supply zone to form. And demand zone is the exact opposite. The demand zone is a zone of support where there's lots of people buying. So you'll find a demand zone where a lot of people are putting in buy orders. You can even check this. You can, for people's positions is public information. You can go on an order book anywhere. You can use Bitstamp's order book and look at crypto's orders, and you can see exactly what prices people are buying and selling at. So not only can you recognize the supply and demand zone by looking on the chart like I'm about to show you, you can also look in order books to look at the numbers to see where a lot of people are buying. You can also see the quantity of how much they're buying, which is the really important part. So here's what they look like on a chart. You can see the supply zone is up high, the demand zone is down low. So we can kind of see it makes sense how in a supply zone, that's where people are selling, because right when price reaches the supply zone, that's when price tanks. And right in demand zone, every time price gets into it, that's where it goes up. So you can see visually, that's where the buys are and that's where the sells are. So how do we draw one? They're pretty simple. There's more than one way of drawing one. So this is the most basic way of drawing it. This way you won't run into trouble because the other ways are more of your kind of visual observation. So this one actually has set rules. So the first thing you're going to do, just like a trend line, you're going to find a swing high. Find a candlestick before a large drop, and then you're going to draw a box around the entire candlestick before the drop. So we're going to go on a chart. We see the swing high right here. Price is higher than it is anywhere else in the chart that we can see. We see a large drop, and we're looking for a large drop. You're not looking for a series of candlesticks. You're looking for one particularly large candlestick, because that means the candlestick beforehand has a lot of sell orders put into it. So we see that large red candlestick that drops. We're now going to draw a box around the entire candlestick, the previous candlestick, and now we have our supply zone. And you can see to the right of the screen, that's where price eventually reaches again. And if we could scroll over, we would see that price dropped over again. So let's look at another example. So here's another example. We see a large drop, and then we draw we draw a box around the previous candlestick. And we have our supply zone. So now we can see exactly where people are putting in sell orders. You can see when price returned to it, farther on the right of the chart, we can see price dropped out of it again. So when price reaches the supply zone, we can think to ourselves, okay, a good sell opportunity might be approaching. You don't want to buy into a supply zone. You want to wait for price to be inside the zone, then drop out of the zone again. So you don't want to enter until price both reaches the supply zone and exits the zone again. So here's another example of a supply zone. We see a large drop. We draw a box around the candlestick right before the large drop, and we have our supply zone. And then you can see when price reaches it again, it stays perfectly within the box. Again, it's okay if the wicks go out of it, but we can see the moment price got out of it, it tanked once again. So we could have gotten a really good sell position right there. All right, so how do we draw a demand zone? It's the exact same thing as a supply zone, except we're looking for a buy opportunity. So we start with a swing low, find a large rise, and we draw a box around the previous candlestick right before the large rise. All right, so right down here, we have the swing low. Now, we don't really see a large candlestick form till a little later. So the first one I see right here, this is the first large rise I care about. Then we draw a box around this candlestick, and now we have our demand zone, and we can see how perfectly price behaved inside the demand zone, bottomed out perfectly at the bottom of it and shot right back out. We could have had a solid buy opportunity there using this demand zone. All right, and then here is one more example of a demand zone. We see the large rise. We draw a candlestick, or we draw a box around the candlestick right before the large rise. And as we can see, when price reached it again, it respected the demand zone, then shot straight up, just like so. Boom. All right, so here's another example. We see a large rise. We draw a box around the previous candlestick. We have our demand zone. Once price returns to it, it respects it and gets spat right back out for a really solid buy opportunity. All right, so a little more about their behaviors. The more time a zone is tested, the stronger it becomes. So unlike a trend line is the opposite. The more times price touches a trend line, the weaker that trend line gets. But for supply and demand and for support and resistance, it's the exact opposite. The more time price touches the zone or resistance or support, it becomes stronger or less likely for price to break through it. When the zone is broken, it loses strength. So if you see a zone that's been tested a couple times, then broke, it's not very strong anymore, and I wouldn't place too many future bets on that. But if you see a zone, a supply and demand zone that's been tested and tested and tested, and it hasn't been broken yet, odds are that it's going to be tested again and not broken. Age doesn't necessarily matter. What does matter is how many times it's been tested and how many times it's been broken. Basically, if it's been broken more than 0 times, it's weak. If it's never been broken, it's strong. That's really the only thing you need to keep in mind. All right, so that's essentially it on how to do it. I will go on some charts since that didn't take very long to go through, and I'll show you how to find supply and demand zones on your chart. Again, if you have any questions, feel free to put them in the chat. This would be a great time to do that right now. So let's just go to the most traded pair, which is Euro USD. Hope you guys caught that buy. It's been riding it up. Crazy signal right here. So we actually have a demand zone right here. So I drew mine a little differently than how I taught it. Because I said there's more than one way to draw it, but I'll show you how to draw it the way I just taught you. So we see the large rise right here. So the first large rise would be right here. We would draw a box around the candlestick, the previous candlestick right here. If you're using TradingView, you just go to where you see the little paintbrush, click the arrow, select rectangle. Now we're gonna draw a box around the whole candlestick. Make it perfect. Accuracy is important when doing price action because if it's not accurate, then you're looking at false data. All right, boom. And we can see how it behaves perfectly. Price enters it and gets spat back out. We're in a buy. This trades up like something like over 100 pips, which is really, really crazy. So just like that. So now I'm gonna look for a supply zone. Show you that they're just as simple. So I see a large drop right here, which tells me that a lot of sell orders are put in this tiny little candlestick right here. So I'm gonna draw my rectangle right around it, just like that. Make it perfect. Boom. So now we can see the moment price tapped right here, got rejected. Price tapped right here, got rejected. So we could have taken sell opportunity right here, sell opportunity right here. And again, like you can see how easily these are to spot. Let's just keep scrolling. In fact, let's go on to a cryptocurrency. This can be applied to any currency, commodity, whatever you can think of that has a financial chart. Let's look at Ripple. Ripple made a lot of people a lot of money these past few days. So let's take a look at it. All right, so let's find where price is really rocking. All right, so right here, we see a large drop right here. And in fact, I'm gonna do this in a higher time frame, just so it's easier to work with. Just trying to find the right time frame for cryptos. There we are. So let's look for a large drop. See a large drop right there. So now I'm gonna draw a rectangle around the candlestick right before a large drop. And they don't always look right. You have to visually check that they're valid. So I haven't actually drawn this one before. I have some different ones drawn using a different technique of drawing them. There we are. So let's see how price behaves off this one. So the only real time it's hit this is when this large wick went through and tapped it. So technically this one has held strong. Crypto's kind of weird. It's more volatile than regular currencies. So you can see that this one tested out. And in fact, I see a demand zone right here that I'll draw out. Boom, right here. So we see a large rise right here. So it'd be this candlestick. And so this one doesn't look like it'll check out. So that's why you always have to draw it and double check. So this one right here has been broken. So you can see price was respecting it, then it broke on the other underside of it. It went straight through. And we can see that the demand zone would actually be more right here. This one. So a lot of Forex is subjective. So this candlestick right here can be considered a large rise because what we can't see through the candlesticks, we can't see the volume that's the net volume entered. So the one way we can tell is it's a really long candlestick, but then the other way of telling is looking through order books. So chances are this is where most of the buy orders are put in. You can see visually it checks out. So that's a little sneak peek of another way of finding supply and demand zones is to exactly where the buy and sell orders are put. So I'll go through a couple more examples before we hop off because I don't want to make this too complicated. It's really not something you should confuse yourself about. All right, so now we're on US dollar versus the Canadian dollar. Let's see if we can find some solid supply and demand zones.
Don't complain.
All right, so there is one right here. So we see a large drop right here. So that tells me a lot of sellers are putting the candlestick right beforehand. So let's draw a rectangle around it. Boom, just like that. So this one hasn't really been tested too much. It was tested once right here. Price tapped it, shot right back down. So already this is a valid and tested supply zone. So when this pair, when the USD CAD gets back up to about to 1.33 around this range, that's when we can look for another sell opportunity. So right now we can see we already have a zone we can wait for. Forex is primarily a waiting game. So if you can understand how you supply and demand zones to understand where the good opportunities are, you can save yourself a lot of time not staring at charts every single day. You can just check once a day, making sure it's like, okay, is it in the zone? Is it not in the zone? If it is in the zone, that's when we can keep a close eye on it. But for example, this pair, if you're doing a swing trade looking for a sell, this is a good time to kind of take your mind off of it. Can you draw a good retest on this? Like what it would look like in the future? I mean, I can do a forecast on it. I can do a projection, but so what I do for that is I'll try to just keep using supply and demand zones to make the projection.
Sorry, I distracted you. I was talking it down.
All right, so we see large drop right here because we draw in the box right here because we see the large drop. We know a lot of sell orders are put right here. So we can see price is in a supply zone right here. And so I would actually might be looking for a sell opportunity on USD CAD pretty soon. So we can use more confirmations to kind of double check it. We can use a trend line like I just showed you. Just like so. So we can see that this is a very steep trend line. We can see that since we know it's steep, we know it's not going to hold up as well as a flatter trend line or a less steep trend line, I mean. So right away I can see price is being rejected by this supply zone. Price is about to break this trend line. So if I were to just take a guess based off what I'm seeing right here, I would think price would be heading down somewhere to this level right here once the trend line is broken. So that's just a quick little analysis using just supply and demand zones and trend lines. I'm just using the Fibonacci retracement to give you a projection where I think price is going to. So yeah, that's basically it. If you guys have any other questions, let me know. This was a nice short lesson. It was really easy. There's nothing too complicated about supply and demand zones and trend lines because the best confirmations are honestly the most simple ones. People try to convince you that you need something a lot more fancy to be profitable, but that's not the truth. All right, guys, thank you for hopping on. If you have more questions, feel free to ask.
Jonathan, appreciate it.
If not, I'll talk to you guys next week.